Hi, my name is Jordan with Jordan Bennett and Associates here at Keller Williams Realty. I'm going to speak with you today about what is seller financing. It's also called owner financing, seller carryback, carrying back paper. Essentially what it is let's say that I'm a buyer and I want to buy a home and I actually have a down payment, but I can't get financing for whatever reason. There's a couple things, and I've mentioned this in other videos, that lenders look at, right? They look at your debt to income ratio. How much money are you making? What are your debts? And that's, by the way, when they look at how much money you make, they're looking at how much money you make on your tax return. So they're looking at how much money you show Uncle Sam that you're making. So you can imagine for a lot of self-employed people, they write off a lot of things and it looks like they don't make a lot of money, which oftentimes can affect your ability to qualify for financing. The lender's going to look at credit, which obviously is impacted by your payment history, your debt loads, and things like that. And then they look at your assets. What do you have for a down payment? So if you have the one piece, you've got the down payment, but you don't necessarily have the credit or the debt to income ratio for whatever reason, whether it be a high debt load or not reporting all the income that you make, you're in a position where you want to buy a piece of property, but no major lender will finance you. Well, what you can do is you can ask the seller to finance. Now, you don't see this very often in a strong seller's market because the seller's got enough buyers to choose from that they don't have to go that route. But in more of a balanced market, and especially in a buyer's market, it's pretty common to see seller financing. So what happens is the seller steps in. Let's say you're buying a $500,000 property and you've got a $200,000 down payment and you need a loan for $300,000. Well, you go to that seller and you say, Mr. Seller, will you carry back that $300,000? In other words, will you be my lender? And if the seller has the ability, and let's say in a case where they own the house outright and they don't necessarily need the cash, they'll say, absolutely, I'll take your $200,000. I will issue essentially a $300,000 IOU, which is the same thing your bank does when they make a regular loan. And they carry back that paper. So you would negotiate the terms, the length of the loan, what the interest rate is, how the payments work. Is it interest only? Is it fully amortized? And essentially that seller becomes your lender. They're, of course, not subject to all the stringent guidelines of, say, your Bank of America's or your Wells Fargo's or your big lenders, because it's just a person deciding, yeah, this risk makes sense or it doesn't make sense. So seller financing is something that will generally see come back when we have more of a buyer's market versus a seller's market. It's something you see more in other parts of the country than you do in Orange County, but it does exist, and hopefully that gives you some insight into how it works. Thanks for watching.